Good afternoon, everyone. This is Nik Fergusson from Life Design Analysis. I'm a senior account executive at the company, and I'm sure we've come across each other as you've been using LDA, whether that's been through the support system or just by email, phone call, demos, that type of thing. Happy to host today's session alongside James Fraser, co-founder of Planworth, an awesome upcoming planning software, and he can explain a lot more about kind of the in-depth technicalities of their system and kind of all the great offerings they have on their side. Really pleased to have you on the session today, James, and thanks for making time for us. So why don't you go ahead and take away, tell us a little bit about yourself as well as more about Planworth.
Oh, yeah, certainly. My pleasure to be here. Thanks so much for having me. I'll take the opportunity today to talk about Planworth, and I'm really looking forward to showing or talking to our audience or showing our audience how Planworth LDA fit into the wealth planning continuum, how they can feature the role life insurance can play in planning, as well as how technology, when leveraged properly, can help advisors better serve their clients. I came into the webinar thinking it would be a good idea to pick a theme and to focus our discussion. And what I'm going to try to emphasize today is the importance of context and understanding it. And there are three reasons for that. First is that context helps advisors spot opportunities and then tailor solutions and products to their clients' circumstances. I guess that's reasonably obvious. Two, and this is a big one, it helps clients understand their needs. And when it comes to implementing solutions, do it with conviction, which I think is really something that's important. And three, it provides a benchmark for determining when planning should be augmented or adjusted as the client's circumstances evolve over time. So with these themes as a backdrop, I thought we'd look at two different households, assess some of their planning needs, and show how software like Planworth and LDA can help advisors quarterback discovery, planning, and implementation. Okay, so before jumping in though, let me give you a bit of background on Planworth and what we do. So despite the accelerating shift in the planning and advisory industry towards planning that promotes client satisfaction and fosters relationships, there's basically existing approaches for elevating advisors to that trusted advisor status to start working. And really, like research plays this out. Very few investors, even those with high net worth, receive truly comprehensive planning from their advisors. And when you actually dig into the analysis a little bit, only 7% of investors receive all the elements of a comprehensive financial plan. Shockingly low when I saw that. At the same time, though, there's an opportunity because the shift away from strictly cash flow-based planning not only gives opportunities for advisors, but addresses a big need for financial wellness amongst clients. And when I say financial wellness, I mean talking about or addressing various things like tax planning, estate planning, investment management, insurance planning, retirement, of course, or home ownership, healthcare and education, savings, debt management, various things. But the idea is that financial wellness is holistic, comprehensive, and touches on the various parts of a client's wealth. So I guess with that background, Planworth, what it is, we're a B2B software platform for advisors. And what we principally do are we make it faster and easier to create and update financial plans for clients. And this is with discovery tools and integrations. We offer white glove family office services like tax, estate, and goals-based planning without necessarily having to have a stable of subject matter experts to deliver that. We keep plans alive by automatically updating and evolving them as the client circumstances change. And we empower advisors to sort of move up and down the wealth complexity curve. So they're growing with clients that can expand the spectrum of clients they can serve. And finally, we help deliver value-added solutions for both advisors and clients that grow revenue and position products, including life insurance, which we're going to have an opportunity to talk about today. Okay, so quick view of the platform and how it works. There are basically 4 pillars to Planworth, and those pillars make just generally planning more accessible. And that's for advisors and clients alike. Make it much quicker, and also make the whole process scalable, which is great. So the first pillar is financial insights. This includes traditional cash flow-based projections as well as goals-based planning. We also do it on an entity basis. I say that because it allows us to accurately do integration with corporations. So the ability to not only model simple situations, but also the most complex ones with corporations, trust, things like that we can handle. Second pillar is wealth insights. This pillar unlocks tax and estate planning opportunities and provides recommendations, some ongoing monitoring, and also some guidance on next steps, urgency, priority, complexity, and cost. Third pillar is collaboration and guidance. This pillar really, from an advisor client perspective, facilitates high touch, high value interactions. Communications are tailored to the client, personalized to them. And as their circumstances change, as we'll see some of these the households today, you can present recommendations and guidance that sort of evolve with or respond to changes for the client. And then the last pillar is one that sort of undergirds everything, and that's our technology. We're cloud-based on and hosted on AWS. We're secure, and we're built on modern languages that lets us, which makes integrations a lot easier, which is also one of the things we'll talk about later when it comes to Planworth and LDA. Okay, so let me introduce our households. So first are the Joneses. Yasmin and Rory Jones. They're in their early 40s, married and have 2 young kids. Their children, Otis and Francis, are 7 and 5 respectively. And everyone except Franny loves Clifford, the family dog. Yasmin is a doctor and operates her own practice. Rory is a marketing executive. Both are successful and enjoy their careers, but want to retire by 70 and still be able to eventually leave money to their children. They own a nice home, which they purchased many years ago. Their mortgage is manageable. They have upgraded the kitchen and bathroom since moving in. They have thought about retirement, but are mainly focused on making sure their kids are taken care of in case something unforeseen happens. Okay, and our second household is this part of the Straw. So Jason Straw is 53. He owns and operates a digital production company. The business is incorporated. Jason is married. He and his wife, Diana, who's 38, have two daughters, Laura, 13, and Adelaide, 10. Jason also has 2 sons from his first marriage. Roger and Martin are 26 and 23, respectively. Jason wants to make sure Diana and his daughters are taken care of when he passes. He also wants to ensure that he can make meaningful bequests to Roger, Martin, and any of his future grandchildren. He has exhausted his lifetime capital gains exemption. His operating company is profitable and holds a lot of portfolio investments. Okay, so now that we have that out of the way, what I thought I would do is jump onto the platform, show you how it works, navigate through some of the outputs and features, and then after that, I can turn it back over to Nik. So
that's awesome. Yeah, let's take a look.
Good. I'm now going to jump onto Planworth so we can look more closely at the profiles of our 2 households, and I'll start with the Joneses. So after logging in, the advisor lands on their dashboard, which you're looking at now. And to start building the client profile, simply click on the Add Client button, which is here. So you start by adding the basics about Yasmin, like her name, email address, birth date, where she lives, marital status, U.S. status, which is an important client consideration too often overlooked. Status is either a client or prospect, preferred pronoun, and eligibility for the disability tax credit. With Yasmin's basic profile completed, you can now move on to building profiles for Rory and the rest of the household. Let's start with the basics about Rory. His name, email address, birth date, U.S. status, preferred pronoun, and disability tax credit eligibility. In much the same way, profiles for Otis and Francis are built. Their name, birth date, U.S. status, preferred pronoun, and DTC eligibility. To confirm details, you can view the family tree and edit it to make any changes needed. I almost forgot to add Clifford. In addition to pets, you can add other relevant people like dependents, advisors, and business associates. With the family tree built, it's now time to build out the client profiles with more details about their wealth and preferences. Answers to the preliminary questions determine what else is asked about the client. Information about each client's savings, income, and estate planning is collected. However, additional topics about real estate and unique assets will also pop up to the extent they are relevant. For the Joneses, Yasmin is tagged as a professional and Rory is falling under the business employer other category. You'll notice that tagging Yasmin as a professional prompts additional questions about career type and profession that wouldn't otherwise be there. This is a simple example of Planworth's smart approach to dynamic question-based discovery and profile building. In this case, Yasmin operates her own practice as an unincorporated independent contractor, while Rory is a traditional employee. She's a physician licensed in Ontario. Here you have here you have room to add details about the client's careers. You can include where they work, how long they've been there, or other notes about professional designations. From here on, questions focus on assets, insurance, and existing estate planning. Once you're through the preliminary questions, you are guided through the relevant modules to help you dig deeper and capture more information about your clients. Simply follow the next button and answer the questions as you go. With the evaluation complete, the client profile has been built out, and now the advisor can navigate from the client dashboard to review insights, identify solutions, and build wealth plans for their clients. The platform is divided into three main parts for each client. Wealth views that provide a financial overview and include summaries of a client's net worth, insurance needs, and expected estate taxes and expenses, as well as distribution. Financial insights that focus on the client's goals, cash flow, and financial projections. And wealth insights that spot tax and estate planning strategies tailored to each client's circumstances and make them really easy to understand. Yasmin's case is a great example of how the parts can work together to build plans that fit the client's circumstances. So let's illustrate this. So based on the evaluation in their wealth views, you'll see that from their net worth, they have a significant estate tax liability on a joint death. Also, given their ages and kids, they also have a term life need. That part's pretty straightforward. Now, a twist and an opportunity. We know that Yasmin is a doctor, but she's not incorporated. Planworth can spot this opportunity for Yasmin to use a professional corporation and also access the small business deduction. And then that opportunity opens up another one to use the professional corp to own any new life insurance policy and fund prospective premiums because of the tax efficiency. So as an example, this would be how the client would interact with wealth insights. And they cover a variety of things. You can organize by priority as well as by insight type, and then use this as a product management tool. This opportunity opens up another one to use a new professional corporation to own any new insurance policies and fund prospective premiums because of the tax efficiency. In financial insights, we can build in the added premium expense to see the impact on the Joneses' cash flow and goals. With our toggle function, the advisor can build different premium models in one or multiple scenarios, turn them on or off, and compare results until they determine which plan works best. This real-time interactive functionality is also a powerful way to virtually interact with clients and involve them in the process. So, as an example, if we introduced a professional corp in Yasmin's structure, what we could potentially do is model with the toggle what a new term life policy would look like. We would add a nickname. We would use the corporation measuring life, death benefit, annual premium expiration, and also set out assumptions on how the CDA contribution or addition to CDA should be distributed as an example. What I hope is coming across is that by better understanding the context, the advisor can not only address the particular needs the client may have, but also enhance the planning to implement those solutions for the client. Okay, let's turn to our second household quickly. I won't spend too much time on our second household, but Jason Straw's situation and objectives are another illustration of how important understanding the context is. So, taking a look at the family tree, we see Jason has a blended family. From his wealth views, we know he needs to address the income tax liability on his death and his wife's death. And from wealth insights, we can see that he hasn't updated his will in some time. And it's something he should do to address both estate planning and make sure that he can achieve his estate goals. Without jumping into all the details, one potential solution for Jason is to use life insurance trust planning in his will and shares in his corporation to build an estate plan that will allow him to meet his estate goals for his wife and children, both the younger and the older ones. Other things to consider may include implementing an estate freeze of opco, introducing a holdco for creditor protection, or adjusting investment strategies to preserve access to the small business deduction. Again, context informs needs, objectives, and solutions. Looking ahead to how Planworth can help advisors on the insurance side, we're working on an integration with LDA that will be embedded on our platform and allow advisors to pull insurance information directly from LDA once the planning needs have been identified, and then use that information in financial modeling. I'm really excited about this integration for two reasons. One, it will free up more time for advisors to focus on planning for their clients rather than discovery and data entry. And two, it offers a level of tailoring precision that we haven't seen in planning before. So with that said, let me turn it back over to you, Nik, to share more about LDA with the audience.
Awesome. Thanks so much, James. That was a great kind of detailed walkthrough of a lot of different ways you can use the Planworth system to be able to kind of contextually identify those opportunities and then ultimately properly and more holistically plan for kind of different scenarios. So that is a great way to kind of walk through that. I appreciate that. So kind of taking those two scenarios into play here, let's actually look at how we take from that identification of a need using Planworth, then move into LDA to actually kind of more tactically handle that need. And so let me just share my screen here and we can actually take a look at how to build that out. So for those who are familiar, this is the LDA platform. And so within this part of the system, I've already gone ahead and created the clients just to save a little time here. But essentially what we'll do here is we've got our system set up where we can pull together our different quotes. We've got our client info here on the right-hand side. We've got both Yasmin and Rory. And now we can actually start to take a detailed look at kind of how we're going to quote this out and ultimately what we decide we're going to do with this. So in the first situation here, James, we had originally identified it was more likely kind of a scenario where we'd use some term insurance, correct?
Term, I think that's definitely like the near and medium term need. Yeah. There's, I think, another opportunity for perm potentially inside the MPC, but I think that's like part of their broader planning discussion.
Longer term discussion. Okay, cool. So let's handle that kind of term scenario here quite quickly. It should be pretty easy to do. As far as the overarching need there, I don't recall the exact amount, but even a round number would work. What was kind of the general need they had in place there, James?
We had it at about 3 million.
Okay, perfect. All that to be said, we can, of course, then dig into kind of a more detailed needs analysis and incorporate that into the actual scenario here. So if we wanted to kind of actually provide some specific details, that can be done as well. For this, kind of for brevity's sake, we'll skip right to actually how we pull the solutions together. So I'm going to pull together the death benefit there that we require to survey the markets. So we'll put that into insurance benefit. And then from here, go into term and actually take a look at what's available based on the parameters we've set here. Two ways we can also handle this situation. Obviously, we can look at like a joint last to die policy, or with recent upgrades to the LDA system, for those who have access to Life Guide and have that integration built in, we can actually look at what we call a multi-life quote. So 2 single life policies for each of the individual clients. So the question is, as far as things go with this, we can look at it from like a traditional joint last or joint first.
Yeah, let's do that.
Joint last.
Yeah, in this case, I think they'll be like everything would be left to spouses on a rollover basis. So, and they're both income earners. So
yeah. Okay, cool. So from there, then we've got our system set up to look for joint last to die. We just got to determine kind of the term length. And this could be something where we maybe pull together a couple of options as far as length of term. So why don't we do that? We'll do kind of like a term 10, 20, 30, just to give a general sense of what's available on kind of a basic need there. So stick with monthly payments. I've got my company filter set up to the preferred company list, and that's essentially just something you can set up in your account settings. And generally what that means is either your, like it suggests, preferred companies you like to quote from and work with. Alternatively, could be all available companies you have contracts available. Totally up to you. That's a customizable feature on LDA, depending on kind of what direction you want to take there. So we've got all those parameter sets. Assuming no issues as far as like health risk or rating, that we can go ahead and actually hit search. And that's going to generate a market survey of the options available based on the parameters we set here. So traditionally, as you'll typically see in LDA, this list is going to be ranked by price. So at the top will be the least expensive by premium. So we'll see here, we're looking at just over $100 a month for a standard term 10 joint last to die. And then we can scroll through the options to see what else is available based on this. Looks like we've got 3 options available here. So I'm going to go ahead. We'll use that Empire Life Solution 10, click add to case, and bring that into our actual proposal. And that's going to pull in both the initial term premium as well as the guaranteed renewal. So be able to see in the longer run what that actually looks like with respect to costs relative to the death benefit there. So I'm going to go back in. We'll pull the term 20 and term 30 quotes and then actually get that pulled together as a kind of a holistic look at what's available and then look at the report itself. So let me grab that quick here. Okay, so we've got our 3 policies added in, or rather our 3 quotes. And now we're going to pull that together in our actual proposal. We can customize the actual visuals utilized for that. And then actually kind of see what the visual output looks like. So design case, we're going to scroll down to the bottom of the screen here. And what we're looking for is report components. And here, considering we're just looking at term, we can keep this relatively concise. We don't want to overwhelm the client with too much information. And so in this case, we can kind of dial it down to just a handful of pieces. But of course, if you find it necessary, there's lots of other additional kind of more technical analysis you can run on this. Like if you want to look at cost per thousand, that could be something you incorporate. If you're looking at kind of more complex corporate needs, then that's where we can really start to dig into looking at credits to the CDA, looking at IFA scenarios, that type of thing. So depending on the scenario, that's obviously going to dictate what we need to use here. So that being said, we're going to keep this relatively simple. I'm going to go ahead to the top of the screen, hit generate report, and that's going to push us into the actual visual output. And so what we'll have is a fully ready to go proposal for the clients and something we can ultimately put in front of them to kind of walk them through that entire portion of their actual presentation, inclusive of the plan. So digging into that, we can look at our premium comparison. So just at kind of a high level side by side, what are our different options we're presenting, our recommendations we have in this particular scenario, comparing the death benefits if they're different in any way, where they're renewable to, kind of the pay terms, and also respective of the years under which those renewals might occur. So now we can actually go ahead and visualize that information. So in the following chart, that's what you'll see here. And this really does help, again, kind of from that same frame of mind, looking at an insurance solution from not only just a technical perspective, but then actually visualizing that information, making that a little more easy for the client to understand and ultimately help them make the best decision that they can based on their situation. So this is showing a kind of a good visual indication of what those renewals look like in the longer term, ultimately what those annual costs are going to be. And then we can also take it one step further and show cumulative. And this is a really great way to kind of help a client understand lower expense might occur with, say, a shorter term product in the initial 10 years. But of course, we're going to see those start to cross over as those renewals hit and start to get more increasingly expensive. And so it is a matter of kind of making that decision if we want to lock in with a more expensive premium now to save money later. Like you can see here at year 21, that seems to be where that term 30 is going to be meaningfully less expensive than the other options, especially in the late term as well. Lots of things to be said about this, but this is kind of a really easy way to kind of define and describe how that process works for the clients and ensure they kind of understand that both from just a affordability standpoint, but also budgeting, cash flow, and kind of taking into consideration context with the actual financial plan there too.
There's just one thing I just wanted to mention on that for that part of that slide, or in particular slide, and how prospective integration can work is that we'd be able to toggle on each one of those products in the cash flow projection for the client, and then they can make a call based on these parameters, which you illustrate here, how that affects cash flow, their goals, their broader planning. So it's one thing on like the apples to apples here, but then integrating that into a broader illustration is really cool.
Totally. Yeah, that's a great point, James. And exactly kind of the point of why we think there's a natural fit between LDA and Planworth to kind of coexist as two systems connected to each other. That's kind of just a great practical implementation of that. Last piece I included here is the same information provided at page 6. It's just a table-based summary of that. So depending on kind of what your client requires, what you know about them from a kind of a learning standpoint and an understanding standpoint, this piece might be more appropriate than the previous one. Totally up to you, and really kind of matter of preference at that point. So that kind of covers off how that process works from kind of a simple, concise standpoint of just kind of a quick term solution. And again, we can look into kind of more complex scenarios from there too. So what I wanted to do is also take a look at that second scenario with the straws, Jason and Diana, as an example of kind of looking at a more complex life insurance planning solution, incorporating both a permanent solution as well as kind of extrapolating into estate planning, looking into kind of what that actually turns out to be in that case. Okay, so the secondary scenario here, we're looking at Jason and Diana Straw, as James described earlier, kind of walking through that, established a need of, again, about a $3 million range. Now, in this specific scenario, we're looking at a situation where we need to utilize permanent insurance to be held through the corporation. And so in this, basically what we'll do is, as opposed to using term, obviously we're going to look at our options for permanent. And so in this case, I can utilize a whole life to kind of capture that need here. So under whole life, we're going to utilize Canada Life in this particular case. You could compare multiple options dependent on kind of how you want to show that. If you wanted to do just for your own research purposes, compare a couple carriers, or if you actually, in fact, wanted to put a handful of recommendations in front of the client, that's totally doable. That's what the LDA platform is made for, is to be able to competitively compare and show the differences innate to kind of different product structures or different dividend structures, that type of thing. So lots of stuff to be doing in that particular context, but in this case, we'll just stick with a singular option here. So we've got our template added for Canada Life. I'm going to go over to my concourse illustration where I've already kind of pulled things together. And so what we're going to utilize here is, again, we'll need to switch into, we've got both clients on here, male 53 non-smoker and a female 38 non-smoker. And we just need to adjust our coverage. So in this case, we've got both of them up here. And now in this particular case, we're kind of looking at a joint first scenario. So what we've pulled together is a state achiever paid at 100. We've added in our scheduled ADO at a death benefit of about $3 million, which brings us to a total premium of just under 70,000, about 68.5 for 10 years. And then we've offset at year 11. So this is going to allow us kind of some flexibility within the cash flow of the plan, but also then fulfill that insurance need in a short period of time at the same rate. So kind of balancing those two parts of the scenario. So As always, when you're pulling a whole life from the carrier solution, you're going to go to view data at the top. That's going to allow us to then export that detail information from their system, and that's just going to push it to Excel. And really kind of the need for that specifically is to be able to utilize the unformatted data so that we can then reinterpret it in LDA. So you can save the file as an Excel workbook or a CSV file, totally up to you. I prefer to use the copy paste method. So you just select the whole sheet, copy it, and then we're going to go back to LDA under design case where we can then actually feed that information in. So to kind of handle the two different methods, if you save the file as an Excel workbook or a CSV file, you're going to use import spreadsheet file and just use the file browser to find what you're looking for. If you copied it, click paste spreadsheet data and just paste it into the text box. It's going to reorganize all that information for you once you hit upload. And that's the reason why we need that unformatted data. So all that to be said, we've captured all that information from the whole life quote, and now we can actually go ahead and start to really kind of analyze that specifically. So I'm just going to make some adjustments to how it will look visually in the report itself. This was our EA 100, year 11 offset. Max ADO. So we've got all that set up. You can add additional description in there too. Like if you added some term writers, that could also be functioned into the description just to give a little more context. Additionally too, if you want to model multiple dividend scenarios, be sure to review which reduced example it's utilizing. So in this case, our system does default to the -1 example, but if you wanted to dial it back to -2, you absolutely could. And then of course, in the actual visual output, you'll have access to the current dividend rate. So click save. And then we're going to quickly run through what we can actually utilize for our visual points of the actual insurance plan here. So once this loads up, we can actually then jump into dialing those in. So at the bottom of the design case, scroll down. A couple things we're going to need to handle as far as presetting the case. Specifically, what we want to draw your attention to is report concepts. So that's going to get you access to a number of different specific things. In this particular case, corporate estate transfer in this particular scenario is going to be the one we need to utilize. I've actually kind of made my own version here, so I can utilize that. What that essentially does is it presets a bunch of selections for you in your report components. So what we'll find, so if we scroll down, report components has been reduced down to what's going to be necessary specific to this concept. So we'll pull out a lot of kind of the basic info that won't be necessary and replace it with a number of pieces that will be specific to this particular concept. So looking at alternative investment comparison, we can add in CDA there as well. We can look at comparing both a traditional investment scenario versus an insurance solution within the corp and show the outcomes of both, compare them, contrast, and then ultimately kind of walk through and determine what's going to be the best scenario and help to educate the client on that. So last step of the process is going to be simply just to set up our alternate investment assumptions. So be sure to switch this over to a corporate tax settings. You can utilize a preset if you'd like to model maybe like a suite of investments held within the corp if they've got a portfolio, or alternatively, you can choose kind of a simplified scenario. Maybe it's just like 100% interest as far as the mix of assets go, and then adjust accordingly as you see fit. So this could be something like maybe 5% interest growth rate. It's going to factor in our tax rates for the corp as well as the RTOH rate. And then from there, we can go ahead and adjust as needed. James, for the life expectancy on that secondary client, what did you have defined out there?
I had 95.
95, okay. So that's a good point to make there. System defaults target age to 85. You can obviously adjust that as it goes, depending on the scenario. So we'll just do 95 in this particular case. The real point of that is that when the target age you set in your assumptions here is going to provide a highlight on that specific year in a lot of the different database components of the report. So you'll see that when we actually go through the visuals here. So we've got all that set up. We've got our information inputted, and we're ready to take a look at the actual presentation. So we go to generate report. That's going to give us our final output here. Awesome. Okay, so diving in here, we've got a couple of pieces of information specific to our solution that we've set up here. So again, as a reminder, we're looking at joint first to die, pay to 100 with a year 11 offset and max ADO in this particular case. So just under 70K per year for 10 years, and then we'll be paid up. Additionally, restating our assumptions. So the tax rates we've utilized, the RDTOH rate, what our investment mix looks like, and then of course some legal verbiage below here. And then secondary to that, I think really important, specifically in kind of ensuring we're giving good advice to a client, both from a technical perspective, but also from an educational perspective. So this flow chart's a great piece to utilize in the context of an estate transfer or asset transfer, in that we're simply just visually explaining in a flow process what these two processes look like and how they differ, what the pros and cons are of each, and why we might suggest our proposed insurance strategy might actually be the route to go. So we'll kind of extrapolate this with the actual data and dig into what it actually looks like in principle, or rather in practice. So I've included here, this is for maybe the more technical folks, or this is something to pass along to the accountant. When we're actually kind of digging into this concept, this is going to look at from beginning to end of both solutions. So both the excess cash flows invested, in this case, 68,460 for 10 years. So just under 700,000 invested into the solutions. What does that look like as a net estate benefit for both options? And then of course, where applicable, is there an advantage or disadvantage with the insurance, both in a dollar figure as well as in a percentage? And so like I mentioned, the highlight or target year is important to note here. So in this case, we're looking at year 42 or age 95. And this is going to kind of place some significance on what the realistic outcome based on our projections here is going to look like. So if we were to stick with kind of a traditional suite of investments, our net estate benefit looks to be about 1.23, 1.24 million. Whereas with the insurance solution, we're looking at about 4.07 or nearly 4.1 million as far as a net after tax estate value. So obviously a pretty significant dollar value advantage, as well as from a percentage standpoint, pretty significant. Again, you can expand out these rows as well too, if you want to dig in further to a specific kind of junction in time, totally up to you. And then, of course, we can visualize this information. So kind of as originally stated, this is obviously a more technical representation of this data, whereas we can then visualize this information. So same data, just shown on a line graph, and really kind of helpful to illustrate what those numbers actually mean at any specific given point. So if we look at, say, age 95, this is going to indicate our light blue line. That's our net estate value of the insurance solution. Dark blue is the cash value, and green is going to be our taxable investment net benefit of the alternative solution. In this case, just an interest-bearing investment. So that kind of gives you a visual cue of obviously kind of put the simple question to a client of like, which line would you like to be? And this really kind of helps to indicate which solution is going to be the best, dependent on kind of the outcome that they desire in this particular case. Again, digging into kind of just some of the more tactical applications within the system. If you're looking to look at alternative scenarios, you can also toggle them down below here. So if we want to look at other options like the current -1 dividend and what this whole scenario looks like with the implications of a lesser dividend, you can apply that there just by toggling in the bottom row there. And then the last piece is more of so kind of a summary of information. So similar to that ledger we looked at, just in a simplified manner. So kind of taking the highlight points of that entire ledger piece. So your excess cash flows, the net estate value of both the investment and the insurance solution, and then the net IRR values. So your internal rate of return on death, what do those look like in comparison to each other? And really kind of get a clear indication of what solution is going to provide a higher IRR. And then last here, kind of a nice clean indication also, like you mentioned, James, kind of looking at that capital dividend account. What does the credit to the CDA look like at any specific given point? Again, too, like if we were looking at multiple solutions, we'd also be able to show those multiple options on the same chart. So we can then again, really dig into, I mean, in principle, CDA is going to be a pretty good indication of what's going to be the better outcome for the client as far as that goes. So being able to show.
And just to frame that in the context of the straws planning, it may very well be where that CDA tracks and is distributed to a particular class of shares that's held in his estate. Perhaps it goes into a spousal trust for his spouse, or it could go and directly be paid out to his children. So on Planworth, what we can do is with this information about where the CDA is moving, we can model which class of shares that it's going to get paid out on, and obviously the corresponding effects on estate goal, cash flow, etc.
Totally. Yeah, that's a great point. And I mean, this is again kind of another example of where we've done all that super detailed and comprehensive wealth planning in Planworth. And then we want to continue that in that same fashion of, okay, we've identified the need of insurance, how much, what kind of application we're looking at, and then actually take a realistic quote into play here and ultimately start to extrapolate that into net estate benefits, into CDA values to kind of get a better understanding of what that can realistically look like in that particular scenario. So lots of stuff to cover here, but this is kind of a comprehensive look at what that type of a solution might be, or how you might be able to utilize the two systems in play with each other in order to encapsulate all of that. And that's really kind of the crux of the whole presentation here today, is to kind of show how LDA can kind of play in kind with other software systems, specifically with Planworth, to really kind of hammer home the importance of complex planning and kind of how we can tactically apply that. So yeah, that really kind of wraps up today's presentation in kind of how we can, both from a conceptual standpoint, apply that, but also then from a tactical standpoint, actually do that in our software systems. So I want to take a moment to thank James for making time for us today and really kind of dialing in a super detailed example of how the two systems can work together. Awesome always to kind of work with other tech partners in the industry. And again, I'm always a fan of touching base with you guys. So thanks again, James.
Really thanks so much for having me. Feelings mutual. I think this is really exciting, and it's great to see the caliber of technology solutions increasingly available to advisors.
Awesome. Well, that's everything for today, folks. If you have any questions, of course, please feel free to chime in through the chats or reach out to us directly. We'll be collecting questions at the end of the session today. And as always, please feel free to hit us up either over email or through the live chat on the site. Wherever it's easiest for you to find us. We're always happy to take your questions, provide additional customer support, or again, provide more information on kind of how Planworth and LDA is working together, and ultimately kind of how we can give more value to you as an advisor. So thanks for making time for us, listening in, tuning in, and walking through today's presentation. Hope you're doing well. And again, if there's anything you need, please feel free to reach out to us. Thanks so much. Have a great day.
Bye for now.